reminds me of a really valuable lesson learned for me years ago. I was in the structured finance department at JP Morgan for 4 years. And we used to attend, it's still going. There was a huge annual structured finance conference in Barcelona. It had thousands of delegates. I mean, even today, post-COVID, it has 1,000, 2,000. But in those days, it would have 6,000, 7,000 delegates. Massive conference in Barcelona, 4-day conference on structured finance. When you are deciding what your speaking slot is going to be, do not pick anything on day 4, because no one will be there in the hall. Make sure you're speaking on days 1 and 2 and the morning of day 3. Okay, it's a lesson learned for me. You spend hours doing your slides, you present the slides, nobody's there. Okay, right. Oh, look at this. Look, in glorious Technicolor. I didn't see that. Very clever. Who changed the camera angle then? Okay. Okay, ladies and gentlemen, if we could please restart, that would be much appreciated. Okay, I'm going to restart, actually. We've got a quorum. We've got most of the chairs filled. So, welcome back, everybody. I hope you enjoyed the morning's sessions. I was right about Yasmin, wasn't I? If we could bottle that energy source, we could probably solve the world's energy problems. Now, we're going to carry on then with a last-minute change to the program, which was occasioned by the fact that the panelists for the original agenda have chosen to stay behind for their own reasons, as we all know that there's a lot of geopolitical tension in this region. So we've slotted in something of equal importance and value, and that is a presentation from John Ho, who is Vice Chair of the Regulatory Working Group, ACIFMA, Financial Markets Association, and also with Standard Chartered out of Singapore, right? Singapore, fantastic place. Bit like Aqaba, really. And he's going to be, if you guys stop talking, don't laugh at my jokes, I'm going to stop making them. Right, he's going to be talking to us about central bank digital currencies, the future of money and tokenization. So, John, I see that you're all mic'd up. Please, the floor is yours, sir.
Yeah. Yeah, thank you, Murad. First of all, before I start, I'd like to thank the ACI Jordan, ICA, and the ACI World Congress for organizing this event. It's certainly lovely to be here in Aqaba. And before I'd like to start, I'd like to acknowledge Your Highness, Dr. Adil Shakas, the Governor of the Central Bank of Jordan, Ms. Randa, the CEO of Arab Bank, distinguished guests. And today's topic is something that a lot of central banks are interested in the topic of central bank digital currency. I think the reasons that form the backdrop, why this is important, are a couple of reasons. We have seen the reduction in the adoption of actual banknotes and coins, especially on the onset of COVID the last few years. Empirical data have shown that the number of CBDCs the number of banknotes and coins have actually reduced over the years. Second reason is the accelerated use of digital payments across the globe. Third is obviously the evolving nature of private sort of cryptocurrencies, stable coins that are being used for remittances and payment. Last but not least is also the emergence of digital assets as a use of payments and cross-border remittances. So I think it's important to set the scene. Why, right? The important is why CBDC as opposed to, jump into CBDC. So if you look at this sort of slides, this is the slides courtesy of IMF, looking at the central bank money is currently available to the public only in physical cash, banknotes, and central bank requires the form of a digital form of money, because the world in which we're moving on is no longer just the analog world of banknotes and coins. It's also the world where cash move 24/7 using mobile phones, digital means of payment. And that's a critical piece of the puzzle, that cash needs to be in a digital form. If you look against the current stats, you could see that the use of cash is diminishing against, and the use of digital payment is increasing. That's the trend, and that trend is here to stay. Right? And then you look at why CBDC. As we mentioned, CBDC is a sort of a digital form of cash. It forms a legal tender. It's issued by the central banks. Essentially, there are two forms of CBDC. One is the wholesale CBDC, as the name implies. It's used for interbank payment, high-value payment across financial institutions. The next form of payments is the retail CBDC, which is used for purposes of general use. And these are two of the main types of CBDC that we see across the globe. And then you have core features of CBDC: universal access, security, resiliency, instant payment, the ability to convert, and a robust legal system is key. IMF have done a study a couple of years ago that, notwithstanding the projects undertaken globally, many of the countries do need to change their laws to provide a digital form of cash. If you look at this money tree, it encapsulates the types of forms of money that exist today. So this is a money tree that was conceived by the BIS, looking at the different forms of payment, where some of them are token-based, some form of cash are account-based, and where things sit. Because as we speak today, when we talk about CBDC, there are different forms. Certain CBDC are looking at account-based payment. Certain types of CBDC are looking at the use of token for money or forms of money to travel around the ecosystem. So this money tree encapsulates the different types of form of money or payments that exist globally. Then you look at the why. If we talk about why CBDC, I think for some of the countries they're looking at is also to enhance cross-border payment, to increase financial inclusion, to also provide for the lower cost of payments, because as you note, remittances in a cross-border payment, as G20 FSB study have shown, it is expensive, it's slow, it doesn't work 24/7, and there is a need now to have a different form of cash to counter the emergence of stable coins and other forms of privately issued payments or digital modes of remittances. Then we move on to what are the benefits as we talk about, right? The benefits, as we know, support liquidity, maintains demand for central bank digital currency, preserving monetary sovereignty, and ability also to reduce the cost of printing banknotes and coins. And I think during COVID, as we know, a number of central banks had to replace banknotes or coins because of fear of contaminations, hygiene. That is a cost in itself, just to maintain printed or banknotes or coins. However, one would say that when we look at CBDC, one should be concerned about how do we address some of the emerging risks associated with digital form of cash, as we talk about AML, CDD, CFT, legal and regulatory framework are one of the many other considerations to date. Now, the next stage we want to talk about, okay, we talk about CBDC. How do we embed principles, structures, and design consideration into a CBDC design? The thing we want to do is three key principles that drive the policy for CBDC. This is led by the BIS and IMF. Three key principles, which is the monetary Hippocratic Oath. One, do no harm. Any potential CBDC should do no harm to central bank money, financial stability mandate, coexistence, acknowledgement that money can be a form of banknotes and coins. Money can also exist in a form of a digital form and potentially could exist with a regulated form of payments such as tokenized cash, tokenized deposit, and regulated stablecoins. Last but not least, innovation and efficiency. We have seen in a number of trials globally that the ability of CBDC could enable using the smart contracts to enable automated payments, to embed programmability in the features that enable payments to be made in a fast, efficient, 24/7 manner that currently do not exist in the interbank cross-border payment. And then on the right, the CBDC evaluation comes from central bank's objective, core design, foundational issues that need to be considered from legal framework, governance, technology, stack, resilience, operational resilience are key. So we look at the types of CBDC. When we look at CBDC architecture, especially in the retail, there are essentially three different main methods. One is the direct CBDC, which means the central bank have a direct relationship with the holder of the CBDC. The second method is what we call the two-tier method, where the CBDC is issued by the central bank uses the banking system to distribute the CBDC into the banking or retail payment system. Third is what we call the indirect CBDC, which is the synthetic CBDC that we have seen in some of the use cases, for example, in Cambodia, Project Pakun. Now, if you look at the CBDC, how do we enable cross-border payments? What are the methods that exist today? Looking at the CBDC architecture and trials and pilot projects globally, what have emerged are three forms of model. The first model is what we call enhanced compatibility, CBDC model 1, where central banks of 2 different or more countries agree to a compatible technical and regulatory standards. Second model is the interlinking model. The interlinking model links the CBDC through 2 different ecosystems. The third model is the integrated single system, and now commonly known and pursued by BAS is what is known as the unified ledger. So unified ledger is you have one ledger to govern the movement of monies, tokenized assets that will allow for interoperability, atomic settlement of assets and liabilities on-chain. That is the sort of goal that the BIS and many of the central banks are looking at, where the Project Agora is the latest example of the BIS-led initiative in terms of looking at tokenization of FX and tokenized financial instrument on a single ledger. So then we look at what considerations we need to have. As policymakers, central banks, they look at what is the policy reason that drive a retail CBDC, a wholesale CBDC within their ecosystem. What are the operational strategies? Technology solution is important. As I mentioned, last but not least, the legal and regulatory framework is key. As we know, money is a legal tender. Therefore, any form of money in the digital form should be underpinned by strong legal and regulatory foundations. So apart from that, the other considerations when you look at CBDC is security, scalability. It must perform like cash. It should be scalable. Interoperability, it should connect with any existing payment system. Its standards and resilience. We talk a lot about operational resilience. One of the things that is key to a lot of policymakers, central bank, is the resilience of the new financial ecosystem. Now, we talk a lot about the design. Let's look at projects and initiatives that we see globally. So if you look at this chart from the BIS, in 2020, this is a survey done in 2021, there were 84 central banks trialing and looking at CBDC. Fast forward to March this year, it's 130 central banks either trialing, researching, looking at CBDC. That constitutes 95% of the central banks globally either researching or looking at CBDC in one form or fashion, whether it's retail CBDC or wholesale CBDC. So, and I think this chart provides a very good overview of what we see today in the landscape of CBDC. You could see 32 countries have an interest to look at CBDC, are doing initial research. You have 35 countries doing one form of research, whether it's in retail CBDC, wholesale CBDCs, 19 countries looking at experimentation of CBDCs, and 4 countries have done full implementation. That is the Bahamas, with the project Sand Dollar, project in Nigeria, eNaira, and also in Jamaica, Jamaica DEX. Last but not least is the Caribbean islands. They have also issued CBDC that are put in circulation in use. And obviously, in terms of a major jurisdiction, China has been looking at the launch of CBDC in phases, and we'll see that trajectory have actually increased, but however, much needs to be done to increase this space. So let's look at what I've just mentioned. This provides a snapshot of the various initiatives that exist globally, looking at CBDC. In this region alone, IMF have done a survey recently. 19 countries in Middle East are looking at CBDC. So this is a very recent chart from IMF. If you look at IMF, the chart in blue connotes countries that have expressed interest to be involved or do some form of research in CBDC. That includes Jordan here as well. Right? So if you look at this chart, there's a very fresh off the press. It's issued a couple of months ago. This is an indication of the level of interest of CBDC in this region of the Middle East. So then you look at, okay, what are they doing when we talk about research? What are the stages of CBDC here? Now, there are 3 forms of things we looked at, we have observed. First, research and exploration, right? Central banks who are new to this, less familiar, they start off with, let's do a research, let's evaluate, let's conceptualize whether the benefits outweighs the risks, and is it worth to actually pursue it based on their current ecosystem, the adoption, and usage. Then you look at the next stage. If they think that there is, from a policy reason, a need perspective to pursue CBDC, the next thing they look at is, let's look at design and test. Let's test. If you look at design and test, this is exactly where Digital Euro project is right now. They've done the experimentation, the investigative process. In the next 2 to 3 years, in the ECB, they are conducting what we call an experimentation process. And after the end of 2 to 3 years, the ECB Council will then decide whether to issue digital euro. Last but not least is develop, deploy, and monitor. That's what happened to 4 of the countries that have actually issued CBDC. They have deployed, they have developed, they have monitored, and they also have enhanced. So Project Sand Dollar came out with very basic features. There's now further enhancement to embed enhanced KYC, CDD, and CFT into the payment ecosystem. Now, let's look at selected CBDC projects and pilots. The first thing we want to look at is Project Helvetia Phase 3. This is a settlement of tokenized assets, the integration of wholesale CBDC into existing payment systems and processes that's being conducted by the Swiss National Bank. The second aspect, which is Project mBridge, which is the multiple CBDC platform for cross-border payment. Now, Project mBridge now have extended beyond its initial approach just in Asia, have now been extended to countries in the Middle East. UAE and Saudi have actually expressed interest to be part of Project mBridge. And early this year, we had a first transaction in an exchange of CBDC with digital dirham in the context of a settlement of a petrodollar transaction. So what that means, if it's done to scale, we will see. The question is not if, it's when. When do we scale up using CBDC in a manner that currently does not use the existing payment system? The third project, which is a very recent project, hot off the press, is Project Agora. Project Agora announced 2 weeks ago that 40 financial institutions globally are now participating in the integration of tokenized commercial bank deposits with wholesale CBDC in a public-private programmable platform. Last but not least, we have also settlement of cross-border payment, Project Jura, which looks at cross-currency transaction with wholesale CBDC. Let's move on to other use cases. Right? Closer to home, IMF have done a technical report with Jordan authorities looking at retail CBDCs. One of the things they looked at is, they observed in their report, is that the local system is quite integrated with local retail players and banks in the payment system. However, there may be a case to use retail CBDC for certain types of payments or micropayments or settlement to lower the cost of transactions or payments to date. But that obviously is a feasibility study that IMF have conducted together with authorities in Jordan, and that shows the level of interest in this region. And then you look at the CBDC projects globally. You have China, as I mentioned, you have the US Federal Reserve Board looking at Project Hamilton, the Banque de France, Bank of England are also looking at CBDC. You have Digital Euro, as I spoke about, Swiss central banks, Bank of Thailand, MAS, Project Sand Dollar, Bank of Japan, and Project Jaffa.
Sorry, John, I hate to interrupt, I'm sorry. I was going to wait for the end for all of this, but didn't the Riksbank conclude that there was no future or value in a CBDC? Didn't they conclude that study?
So Riksbank, yes, because partly in Finland, it's a highly digitalized economy, digitalized payment. However, some of them are looking at, beyond retail CBDC, they're also looking at wholesale. For those that have concluded that retail does not make a case.
So in Sweden, they're still continuing the study? Because I thought
they have done
concluded
4 stages of it, but they're concluded at this stage.
Right.
Similar to the Bank of Canada.
Yeah, okay.
They do not need for now. But however, there's a caveat. They did say we're doing this study because we want to stay relevant.
Understood.
Knowing what the technology works.
Thank you, that's fine.
So I do think for countries to date that have yet to decide on CBDC, they are still going ahead with trials.
It was only in response to the slide. Thank you very much. Please, my apologies. Please carry on.
Welcome. And then you look at what are things to consider from policymakers and central banks. You need to look at the legal nature of CBDC. What is it? Is it a legal tender in a digital form? Or is this a normal other modes of payment that doesn't constitute legal tender? Like, for example, the privately issued cryptocurrencies, they may be widely accepted, but at the end of the day, at this date, they do not form a legal tender in most jurisdictions. Then you have legal mandate to issue CBDC. As I mentioned, interoperability is key. Governance on programmability, rights payment, data privacies are key considerations. Now, if you look at the other designs I talk about, you obviously have legal powers, transfer powers, oversight infrastructures are key elements to consider in the form of a CBDC. Applications in banking, what can bank do in CBDC, right? Often they talk about that. Oh, CBDC would going to be disintermediate bank deposits, and banks may not have a role. However, if you look at some of the learnings in CBDC research, there's a role for FIs and institutions in this space, as I mentioned here. You got cross-border support, CBDC applications, services, operators. There is a role. These are new business models that could emerge with the adoption of CBDC. So let's look at, when we talk about CBDC, it cannot be seen in isolation, because if all that CBDC does is just provide a digital form of cash, there's many people ask, why CBDC? Because I have my mobile phone, it's attached to my credit card, it's attached to my wallet. Why do I need a CBDC? And this is where tokenization, looking at tokenization makes a huge difference. And this is why when we look at CBDC, you cannot look in isolation. You've got to look at where does the future of finance, where does the future of payment is going to lead us. So let's set in perspective. Why is it important? There's 133 billion of costs right now with respect to spend on post-trade settlement and costs. These are costs that incurred after you've done a transaction, whether in a form of securities, derivatives, or payments. Then you have the potential for tokenization has the potential to unlock 1.7 trillion worth of assets, or illiquid assets, that could be democratized and given access to a wider pool of investors. Third is the size of blockchain, or DLT, is going to grow in 2026 to 56 billion. And the number of blockchain devices that we see is increasing. So by the time we put these figures, probably most of the figures will be outdated and it's on the increase. But what we're trying to show is the numbers are not small, they're not de minimis, it's here to stay. Look at where we are in the evolution of money. We start off with barter trade 1,000 years ago, started off with paper coins, plastic cards the last 60 years, electronic transactions the last 20 years, and most recently, cryptographic digital assets that have the ability to move money at scale, atomic settlement, without carrying any credit counterparty risk, if it's done in a regulated manner. And you look at payments. As we talk now about payments, we look at, okay, well, I still have my CBDC. How are payments made? Studies have shown a number of emerging markets, if we do not have a form of digital cash, the form of the adoption of cryptocurrency, stable coins, utility tokens that are unregulated is going to increase. So most central banks are now looking at, we need to offer a digital form of cash against the backdrop of increased usage of other forms of payments. Then you look at tokenization. So what is tokenization? Tokenization is the act of creating a digital representation of assets of value, and typically they are issued on a distributed ledger. And a lot of focus these days, when we look at central banks alongside CBDC, is about the word real-world asset. How do I tokenize real-world assets? So this is a recent study to look at what can be tokenized. We're not talking about crypto here. This is all about financial markets assets, traditional assets, hard assets, real assets of financial markets. Cash, deposits, mutual funds, ETF, alternative funds, unlisted equities, intangible assets, real estates, and the list goes on. And this is not the future. It's already, some of these types of assets has already been tokenized, but obviously in small sizes compared to your traditional equity market and FX market. But this is increasing because the demographics today, when they want to invest, they no longer want to use a paper-based or transaction. What they have is a mobile phone. The mobile phone today does not just represent a means of getting in touch. It's also a means of access to investment, making quick decisions, remittances, and this is why a digital form of cash is critical to be considered in the ecosystem. Now, if you look at DLT, you say,
John,
look, where are the use cases?
Sorry, forgive me again. Can I ask that you wrap up in 2 minutes? Is that
Sure,
okay?
sure.
Thank you.
So these are the use cases here. Take a quick look. I'll do very quickly. And regulatory approaches, many countries are looking at different regulatory approaches and how to handle that. In Europe, we have MiCA they've put in place to regulate the digital assets. And then these are different regulatory framework to sort of regulate the tokenized assets. And then what we're seeing is, what are the opportunities? Issuers, custodians, rating agencies, there are new business models being created for FIs, right? And then what you're seeing very quickly are different forms of asset classes, different form of structures and ecosystem in the space. And then what I want to say is this is the emergence of new business model, right? So when we look at tokenization, it doesn't stop at there. There are new business models that exist today. So very quickly, this is the space we are right now, right? We're not talking about institutions that are not doing, this is a good example of the number of players involved in the world of tokenization and digital assets. I'll wrap up very quickly in terms of future trends, just quickly. The future of banking is not just payments. You must be able to offer trade, settlement, post-trade. Digital identity is key to that. You must be able to provide value. Stablecoin, CBDC, digital token, and programmability in any forms of payment is here to stay. Right? So future of payments, I have to talk about. Regulatory framework is important. What we want to end up with, the issuance of CBDC in major jurisdictions is not a question of if, it's a question of when. I think we are in a journey now to look at, as I mentioned, the design phase, the ecosystem, but it's quite important to bear in mind, we are already seeing some adoption of CBDC, although it is small in numbers, but it will grow in scale. So the sort of takeaway I want you to look at is you should look at digitization as a standstill reason. You should look at what does the future of money, the future of payment holds. And for those of you who are the policymakers, the C-suite, the question is, how do I seize on this opportunity? With that, thank you very much for listening.
No, thank you. Please stay there. Please stay there. Could you go back one slide, please, and leave it there? Right, do we have a roving mic available anywhere? Do we have a roving mic? Yeah, where is it? Perfect, fabulous. Right, we've got a few minutes. Does anyone have any questions from the audience? Because I've got loads, but hey, like I said, I don't want to monopolize the chat. We've got a hand up there, the gentleman there on your right. Please just state your name and the firm you're with, please.
Yeah, I'm Amar Abu Sair from Arab Bank. I have one question, please. Don't you think there will be an arbitrage a lot between CBDCs and what is available in the market, especially when the central bank issues the CBDC at the first time in the issuance? Do you think that the market will behave exactly as it is, and the value of the CBDC will be equal to the value of the current cash liquidity? Thank you.
If you look at the evidence to date, I think that's a key concern, right? Whether there's a risk of arbitrage. But if you look at the issuances that we've seen, 4 of the issuances to date, a dollar is a dollar. So because it's backed by the central bank, therefore at this point it holds its value. The difference within that, if you look at the algorithmic stablecoin, it's not backed by anything. It's backed by confidence, faith that it will exist. As we all know, with algorithmic stablecoins, when the tide turns, people now lose trust and it loses its peg. So the short answer is, if the value of the CBDC is important to peg to the sort of full faith and creditworthiness of the central bank.
Thank you very much. And we've got one at the front here. Thank you. And this gentleman needs no introduction. It's the governor of the central bank. Go ahead, sir.
Thank you so much for the excellent presentation and comprehensive. I think it's very interesting to see how central banks respond to the question whether they are interested or not. It's worth looking at the Fed. The Fed reaction is we are studying, we are analyzing. They have not started any proof or let me call it serious work. And I had met Jerome Powell, I think, in 2023, and I asked him directly, and he said, we are doing this slowly. Till now, they have not decided whether the benefit can outweigh which is similar to other banks, of course. And I think for me today as central bank, I haven't seen a study that shows the impact on the monetary policy transmission, especially what is the new format of deposits and the credits, and how this translated in the market. I think this is the question that we need to answer as regulator. How our economy will we impact it? How the monetary policy will function in this CBDC? Of course, CBDC is, as you mentioned, it's a huge benefit, whether it's financial inclusion, lower cost, transaction cost, but yet these questions to be answered. Thank you.
Thank you.
Thank you.
Thank you. I think that's a very good question. I do think this is one of the considerations at policymakers looking at whether the introduction of CBDC, instead of having more benefits, whether it actually could embed more risk, especially risk of disintermediation in banking, and also where money moves very quickly, where you have a digital bank run, whether it causes more stress in the system. And I think these are very valid concerns. And one of the things, if I may sort of share, in terms of the digital euro project, is they're also looking at CBDC being held in small amounts. So in the sense that they are used for more retail use cases, as opposed to large value for holding or investment. So they're probably looking at how do we enable CBDC for purposes of payments, for retail usage, as opposed for large movement of currency. So they are looking at imposing a limit. Similarly, in the concepts phase in the Bank of England, they're also looking at limits, of a couple of £1,000 or a couple of €1,000. That is something being considered because, as Your Highness mentioned, this is a real concern among policymakers.
Thank you. One last from the floor, one last. This gentleman needs no introduction. He's spoken already. Stefan from ACI, please.
Thank you for the great presentation. Very interesting subject. For me, the elephant in the room is really the when. When is the when? So do you think it will be like a transformation from the checkbook to the debit card? People still use checks and migrating slowly to the use of digital payment? Or do you think it's going to be more acceleration and big bang approach? And if so, when do you think people will see CBDC as mainstream?
Yeah, I think the way to look at CBDC is not to look at CBDC applicable to all jurisdictions. I think it all depends on the level of development in the country, the level of financial inclusion, the digital adoption in our market. Here's why. If you look at the 4 countries that are being adopted, it's largely to grant access to the unbanked, unserved, and in many countries, they do not have good infrastructure. Therefore, the use of CBDC to access or boost financial inclusion does make sense. Conversely, if we look at the Scandinavian countries, they have looked at it, as you mentioned, with Reese Bank, look at it, because the adoption of digital payment is already in more than 90% in terms of the sort of adult populations. They don't see a need for that. But I do think increased focus when we look at tokenization, there's greater interest today looking at wholesale payment. The reason is, when it comes to high-value cross-border payments, currently there's friction points. As the G20 FSB have highlighted, it's expensive, it's opaque, it's not transparent, and it's slow. So how do we do that? So one method they're thinking about is unified ledger, is one method. Another method is the interlinking payments that we've seen with UPI payments in India, MES in Singapore, linking payment system within the ecosystem, allowing payments to be made at scale.
Thank you. Thanks very much. Now, John, that was fantastic. We could have actually spent all 2 days of this event just talking on this subject. Now, if you don't mind, just got a couple of points myself, and I hope this is relevant for everyone here. There's CBDC and there's tokenization. The tokenization, to me, I can see the connections, but actually you can treat it as a separate. I mean, that might have a use case to do with commerce, increasing volume of transactions, having asset-backed tokens. That I get. The CBDC one, well, can you go back to the slide on the Hippocratic Oath? The Hippocratic Oath one? Here's my question, and I'm just playing devil's advocate here. because I thought it was a fantastic presentation. It did have a touch of marketing about it, but I like that. Now, here's my question. If you go back to the Hippocratic Oath one, where is it? There we go. There we go. That's it.
Yep.
Right. So I'm reading that. Here is my question, and I'm just playing devil's advocate. It looks to me like it's a solution looking for a problem. In other words, my question to you as devil's advocate is, what are we trying to fix here by having a CBDC? Do you see what I mean?
So you're right. I think the way to look at CBDC is not to look at CBDC in isolation. Then what's the killer app situation? Increasingly, people are looking at if you use assets that are being tokenized, whether it's money market funds, real estate, IP rights, then it gets real. Because what happens, you need atomic settlement. You have one set is your asset leg that's being tokenized. You need a digital form of money that is trusted, it's backed by a central bank, so that you can actually settle it instantaneously. Right now, what we're seeing is stablecoins. As we note with stablecoins, even in times of stress, especially last year, certain types of stablecoins also depeg. So, and what we're seeing is you need a digital form of cash for the movement of assets on chain. One aspect is the asset side, the liability side. It must work hand in hand.
I love your enthusiasm. I love your proselytizing. One more thing. Actually, if we could go back to that other one towards the end, where we had the summary bit. Is it a good thing to go to a completely cashless commercial environment? Is that a good thing? I mean, some people quite like cash. I mean, I've got cash here in my pocket right here. In fact, I took the trouble of exchanging a few dollars to Jordanian when I got to the airport, even if it was 4 o'clock in the morning. No, it was 1 o'clock in the morning, so I could give the taxi chap some cash. Now, that's just a spurious anecdote. Is it a good thing that cashless is an objective? I'm asking. I don't know the answer to that question. What do you think?
Sure. I think most central banks have realized that you need to have banknotes and coins alongside digital form of cash.
Right, okay.
So it's not all or nothing, because as you note with digital cash, or right now, digital form of money, one very live example is last month, due to climate change and all that, there was huge flooding in the island of Hainan in China. As you note in China, people now hardly use banknotes or coins. They use mobile phone for cash. However, in a crisis situation with floods, there's no access to electricity. You can't charge your phone. For a couple of days, many of the residents are unable to make payments, unable to wire money, unable to transact to buy food. That is an example, live example, where policymakers need to think about. When we look at providing digital form of cash, it should complement the policy of making sure banknotes and coins are available.
Great. That has just addressed some of the more wilder conspiracy theories around the world that says CBDC is all about central control. But if it's alongside cash, we're okay. Right, one last thing. The Bank of England concluded that there might be a case for saying if we introduce a CBDC, every citizen from the age of 18 should have an account at the central bank. Now, I can see the logic of that, because then it doesn't matter what your level of income or what you're doing in terms of commerce, you have direct access, in which case I wouldn't really need a bank account. But of course, that would then mean the central bank is extending credit as well, and I don't think we want to go down that route. The track record of public sector-owned banks and credit risk is mixed. So what do you think about that conclusion, that every citizen should have this CBDC account at the central bank?
So that was one of the earlier thought about, look, the direct access, as I mentioned about. But I think if I look at the CBDC minutes, which is all public anyway, which is part of the Bank of England, they are probably leaning towards what we call the two-tier approach, where if they were to issue a CBDC eventually, then it will be they will involve banks or financial institutions to deploy in terms of acting in terms of KYC, AML, and deploying the CBDC into the ecosystem as opposed to a direct relationship.
Okay, John, you're a top man. That was fantastic. Thank you.
Thank you.
John, that's brilliant. Thanks very much.